Welcome to 𝐄𝐓𝐇𝐄𝐂, where we talk about investing, finance, and professional women. As the recording time of exactly 10:30 a.m. on Eastern Time on September 14th on Wednesday, with respect to overall market, obviously today is relatively suppressed from the day before, with respect to the negative CPI report, which cultivated to a lot of negative media affectation, cultivated to a lot of whale selling. And then psychologically a lot of smaller investors kind of follow on. And as of this morning, with respect to the PPI report that we were expecting, seems like on a high level we are meeting with expectations. Declined by 0.1%. On a wholesale perspective, on a year-over-year basis, if you look at that, gauging the wholesale prices again, increased by 8.7%, which is the lowest since 2021 of August. So it seems like we meet expectations, but the CPI report typically outweighs the PPI report. So we are still kind of gliding, but obviously we are like kind of leveling off the plane, if you may. Not like doing a nosedive again, like the way we were experiencing yesterday. But take a look at some of the whales activity in the recent time frame. You could see that, look at BlackRock, for example. In the last 24 hours, they sold $1 billion worth of stocks. If you look into it, like Adobe, $2.2 billion, Intuit, $2 billion, ServiceNow, $1.8 billion, Microsoft, $1.8 billion, Palo Alto, $1.3 billion. And like, take a look at this. Feel free to refer this list on our Patreon. Like, this goes on and on and on and on and on and on, a lot. Like, they also bought some, but in terms of the amount dollar-wise, it's definitely outweighed. And you talk about like 2% of trillions of dollars, right? So collectively, they have sold like 5% of trillion-dollar portfolio. That's pretty sizable. In addition to that, ARK Invest was also pretty heavy on their selling as well. They bought some, but obviously it outweighs, the selling side compared to the buying side of the house, right? So, with respect to the, upcoming catalyst besides, so we got over the humps, right? CPI report 13, PPI report today, 15 is the merge on a micro perspective. So how does it look like right now on a technical front? You could see that clearly we are about to form a death cross, which I don't like. We are resisting at 45 out of 70. The next level down is going to be 35 out of 70. Right, so ideally we need to cross down before we cross up, right? So coming down to 1450, coming down to the next level of 1250 is very possible. And on a weekly right now, we could see that it's quite bearish too. We need to cross down and then cross up. You could see we have a double heads on the RSI right now. So coming down to the next level 30, coming down to the 24 would be very possible. So something to think about and be careful of. So I think in a daily and weekly perspective, we are going to see some volatility. On a monthly, we are going to be seeing, we're going to be landing on a plateau coming up. You can see that we're kind of plateauing on the monthly front, and it's showing some sort of a reversal. So we need to kind of ideally form some sort of a landing zone, which doesn't seem like we are yet, but eventually we will. But what this is indicating is that in the months out, right? Ideally in maybe November, December, Santa Claus rally, or even Q1, we should see some good reversal from here. And then on Bitcoin, same thing on a monthly. Weekly looks bearish, just as Ethereum, not as bearish as Ethereum in comparison. It's more stable, but we're basically holding on by a thread, right, at $20,000 at the moment right now. On the daily, looks extremely bearish. You could see that clearly. We broke the wedge, which is something expected, right? This is an upward wedge formation, and whenever you form something like that, as you further and further, you get the apex and you break down. So right now we're coming back to basically 20,000. But can we break down further? Yes, I would say yes, we will. We will break down to 19,500, 18,500 even, and I think breaking 18,500 is very, very plausible, in terms of how it's set up right now. Okay. So that's really much on the news front, and the technical front. Let me know if you have any questions on this one. It's a relatively quicker one. So my collective I would say synopsis and the summary of this analysis is that daily and weekly we're going to see more volatility, knowing the fact that next week is going to be the FOMC meeting, and knowing the fact that the weekend's coming and we still have some elongations of a couple of days of separation between obviously tomorrow and today all the way till next week. So I don't quite like it. Maybe the market will tell us differently. And we have to continue to keep an eye out on the buying or selling activities from the whales, because that tells us a lot. So check out our Patreon that we post on a daily, and they will give us a lot of information on like what's the tactical next steps that we should approach. And I think the buy the rumor, sell the news effect should be happening based on my gut feel, but again, it's a gut feel, right? But the technical is indicating that it is a bearish trend. We should ideally see lower level. So I think that my hypothesis still holds, but feel free to correct me if I'm wrong, right? Have a good day, and I'll check you on the next one. Take care. Bye.